Hey everyone, Jeff McGinnis again at Cross Country Mortgage, and we're in February. So I wanted to share with you the three things that you need to know, or remind you of the three things you need to know about rates in February. We're going to take a look at the bond charts. We'll take a look at inflation. We'll take a look at jobs and see how we did from last month. We'll go to the charts here momentarily. So here we are in February. Welcome to it. And in our next slide, just to remind the folks that have been here before, or if you're here for the first time, when we look at the bond chart, we want to make sure that we're looking at it the right way. So in this particular chart that we'll see next, up is good for interest rates and down is bad. So green good, red bad. And as we look at the chart, it has been over the last 30 days kind of flat, if not slightly down. So rates haven't gone into a lot of improvement over the last 30 days, but we are getting into a channel of downward trending rates. And that is what these purple lines are. We show over the last 90 days or so, just a little bit longer actually, the trend of this chart is heading upward, which means that rates are over the long haul trending downward. Now, when we talk about predicting rates, a lot of this will be based off of inflation and what the Fed wants to see. And the Fed's favorite measurement of inflation is the core PCE. And not that you need to know what all that goes into that, but what we want to look at here is our trend, which is downward. So from November to December's numbers, it is trending downward, which is really good for mortgage rates and where the Fed wants to see those. And the last thing we need to take a look at are jobs. So our jobs we don't want people to lose jobs, but we want to have the right size of unemployment so that the economy doesn't get too overheated or too underheated. And right now it's about the same. So the last month's numbers were pretty well identical to the report that came out for this month, and we are flat on this. So just to keep an awareness of what's going on in the jobs. And then finally, the dual mandate for the Fed, their job is to keep unemployment size at right around 5%. That's what most economists that take a look at these things want to see for full employment. They're also mandated to keep stable pricing and moderate long-term inflation. And to the Fed, that core PCE number, what they're targeting is something right around 2%. So that's the numbers for this month. I hope you found it helpful. If there's anything I can do for you, let me know. I'm happy to help with your refinance plans, or if you're looking into purchasing a home, I am here to help. Look forward to catching up soon. Take care.